So Jordan is next pitching to the Angels for funding to convert an industrial building into residential use under full planning. So what you're about to see is the pitch that Jordan made on the hit Sky TV show Property Elevator. This is, of course, the programme where budding property entrepreneurs pitch for funding to 5 property angels to fund their property projects. The property angels that feature on the show are John Howard, Helen Chorley, Paul Mahoney, Nicholas Wallwork, and myself, Ranjan Bhattacharya. So there are plenty more pitch videos from Series 2 of Property Elevator. Catch them on the playlist. There's a link in the description below. Binge watch them, you'll learn a lot. So very shortly, we'll be filming Series 3 of Property Elevator. And if you're inspired and want to come on the show and pitch for property funding for your property project, then I've got a link in the description below. Go there, register your details, and I'll let you know as soon as we start filming that series, and you can be pitching on the show as well. So let's meet Jordan as I hand you over to Elizabeth Warburton, the show's presenter.
So we have Jordan with us today. Jordan, tell us where you've come from.
I've come from Wellington, Surrey.
And what is your deal that you're bringing to the Angels?
Okay, so the deal that I'm bringing today is a conversion. It's a B2 light industrial conversion to residential.
Okay.
So it will require full planning and a significant amount of money.
Lovely.
So I'm hoping that both the knowledge and finances of our angels will help point me in the right direction and I can get a deal and a collaboration.
Jordan has brought this deal to us today, and it's 10,000 square feet of, looks like light industrial to me. I believe there's a planning application that's failed on it. Let's get Jordan in, shall we, and ask him some questions and see what we can do, see if we can invest in Jordan. Jordan, thank you very much for coming today. Tell me something about yourself and then about the deal, please.
My name's Jordan Roye. I'm a personal trainer by trade. I've always been interested in property. I've got a family of tradesmen, so father, uncle, cousins, and so on. Yeah, definitely, which has kind of fostered my interest over the years. But since I bought my first flat, which was about 4 years ago now, I kind of realised that the process wasn't that difficult. I could negotiate it with regards to working out what I'm able to borrow, speaking to brokers, speaking to solicitors. It's doable. It's not unachievable. So after that, I continued in my current career, but I started trying to upskill myself as to how I could get into property. I've a friend of a friend who's been quite successful, been a developer, so I know that it was achievable. And looking at some of the people in the room, I've followed your YouTube channels and particularly Ranjan.
Oh yeah, that's nice, isn't it? Oh.
I like Jordan already. Listen, if you haven't already done so, subscribe and hit that bell icon so you're notified when we upload our new videos.
Yeah.
I thought I'd throw it out there, guys. I thought I'd throw it out there.
It's not the Ranjan show.
Do you want, excuse me, do you want the rest of us to leave? Leave you around?
Well, why not?
Since learning of the show, I've done a bit of research on all of you. And,
good answer.
And yeah, I've definitely found that you're all successful in your own areas. And
there you go. He's building back bridges with the rest of the angels. Smoothly done.
Just really happy to have the opportunity to present to you all.
So we've heard about yourself. Let's hear about the deal, please.
It's a B2 industrial to hopefully a C3 conversion. It's been marketed up for sale since 2015 at various different price points. It's had planning permission refused, which was in 2018. I believe that there's a good to strong case for a residential development, which is why I'm putting the proposal to yourselves. This deal, I would say, is slightly outside of my scope, definitely, and would need an angel. So if you see the value in the deal, I felt that this is potentially something.
No, that's exactly why we're here.
Juicy that you could get your teeth into.
Jordan, at all.
Looking, I've gone on a viewing on the site with an architect that I've been working quite closely with. We haven't committed to doing a sketch proposal because I offered an initial subject to and an option agreement, which were both turned down. So I didn't feel it was worth my while going out of pocket on the architectural fees when I had no possible way of financing the deal. So
I'm sure we're going to come on to this later on in this video, but there are a couple of issues that I'm sure people are going to really deep dive into. One is the issue that previous planning application has failed. Now, the important thing is, now just because one application has failed, it doesn't mean anyone else is going to fail. What you've got to understand is why the previous one failed. And you've got to know exactly why it failed, and you've got to understand what you are doing different that is likely to meet with some success. It's very open and transparent and exactly the right thing to do, to come on and say, hey, look, this is a little bit outside of the sphere of what I'm able to do or what I have done, and I'm looking for that kind of support. That's exactly what this show is all about, and people shouldn't be shy about saying that. The issues that I had with the planning and why has it been rejected before and what you're going to do differently, I think that is worth engaging a planning consultant to do an initial feasibility because that helps shape the proposal.
From the viewing that we've done and looking at the refusal notice, we believe that there could be a scheme of 5 buildings, which we were looking at a mixture of 1, 2 and 3 bedroom apartments.
Okay, and what can you buy it for?
1.15, which is recent. Since I've viewed the property, the vendor has reduced the asking price by 100,000.
Oh, that's a good start, isn't it?
They're no longer trading from the premises. He's retired. He definitely wants to sell the property, but he's reluctant to take too low an offer or a subject to. But we know he wants to get rid of the property, so I think there's definitely a deal to be had. There may be a deal to be had with regards to different creative financing. I'm not sure what his needs are in terms of, I know he wants to get out of the property and he's obviously paying rates on the property. I've got some figures.
He's obviously asked the right questions here. He's found out a little bit about the vendor's circumstances, he's retiring, and that's all good stuff. I think the issues that concern me is the vendor has rejected any subject to offers. Now, when you're dealing with a situation, a site which has had planning refused, and you're going to resubmit a planning application, that's complete uncertainty. And subject to offers allow you to de-risk that whole element of it. Because what you're saying is, look, I want to buy the property conditional on me securing planning. If I ain't going to get planning, there's no point me buying the property. And that is the only way to buy properties like this. Now, it seems that the market is kind of agreeing with what I'm saying, because one of the things that Jordan said is that the property has been on the market for some time. The vendor is a little bit unwilling to accept these sort of subject to offers and has slashed the price a little bit. It's come down by 100 grand. So these are all signs that the market is telling the vendor exactly what I'm saying in my commentary.
Which I pass through to you guys on the rates that he's currently paying. So we know that it's costing him.
How much are the rates, Kyle?
The annual expenses brought the rates, the utilities per month, and the mortgage payment at 65.
I don't want to talk about. We don't want to talk about mortgage payments.
So yeah, I didn't think so.
Helen.
Now, I think what Jordan's done there is actually very shrewd. It's important to find out what the pain areas are for the vendor for actually owning this site. And I slightly don't quite get why John was a bit dismissive about the mortgage cost, because one of the pain elements is the mortgage repayment as well. So what Jordan's done is said, well, okay, you're continuing to own this property, but having it empty and not doing anything is costing you this much of outlay every month. And that will be a material consideration for the vendor when he weighs up all the offers.
What do you think?
Do you know what the return on GDV on this is?
The return on GDV being the ROI?
No. The expected profit over the GDV?
Sorry, the cash flow?
No, so the profit you're expecting is 800k, right?
That's correct, yep.
Okay, and your GDV is 3.35.
That's correct. Yeah.
So your ROGDV is 23%. On something of that size, to me, that's quite tight. I mean, it's kind of standard, and it's what people look at. I think we're in very different kind of circumstances, environment at the moment, and I do have concerns about kind of the economic environment that we're going into. So for me, that's probably a little tight. In the 800.
So what we're talking about here is basically the profitability of the deal. And the concern is that these are long-term projects. You haven't got planning yet, so you don't know how many months or years it's going to be until you can put a spade in the ground and actually build these things. And then when you've actually built them, what will the property market be like at the time you're ready to sell these units on? So this could be 2 or 3 years away. So during boomish times, a lot of people will be going for sort of 23, 24% return on GDV. But in a more uncertain times, you expect a little bit higher return. You should gun for a higher return, because what you want to do is shield yourself against any potential downside at the time you're looking to sell.
No, in your costs, so your build costs of a mill, what have you got factored in for contingency?
I've got contingencies separately at 100,000.
Okay, 10%.
I've run my build costs. I'm not a builder. I've done the research that I have on builds, and I've brought it in at 150,000 per building, and that multiplied by 6 equals my 900,000.
Right.
And I've put 10% on that. So I've gone, just in case we get the architect in there and we can actually get more than we expect, more development value than we expect and more square footage, then I've tried to factor in that from a build cost perspective.
And in terms of kind of your comparables to base your GDV on, where have those come from?
I made the ridiculous mistake of popping the links on the spreadsheet rather than the Word document.
See. Yes, okay,
but
that's all
next to, on the spreadsheet, there's several links of sold prices within a quarter of a mile to a half mile radius. It's like for like properties.
The last refusal of planning is relatively recent. I guess what I want to probe is why you feel that you've got a better crack at it now. Because what I would have liked to have seen is, rather than an architect being involved, is a planning consultant actually go through, because what I find is architects, they do the drawings and the space and the light and the grand homes, grand designs type of, that kind of layout people. But the planning consultant's skill set is more like a lawyer. They're looking for the precise meaning of language, words, policy, and seeing what you can do and whether something's actually justified. And that skill set is completely different to an architect. So what I would like to see is a planning consultant feasibility study to say that there's actually a prospect of getting this turned round under a slightly different scheme. Has that been looked at?
That, I'll be totally honest, it hasn't been looked at. We haven't done a feasibility study. I've been in communication with a planning consultant who works alongside the architect that I currently work with, and he's viewed it as there is, looking at the refusal letter, there is in principle a scheme is viable, but I would have to obviously go out of pocket for him to do the feasibility study.
And the second thing I'd say is that if that's the case, this has to be a subject to or a conditional type of offer. And one of the ways to bring the vendor on board is to basically cut them into a slice of the uplift so that they get more than they would do at the moment, which they're constantly reducing the price at the moment. Give them more of what they actually originally wanted by cutting them in for a share of the action.
First off, love the...
So, well, I think I said it quite well in that little piece. But just to add, if you're looking to go back to planning after a refusal, get a planning consultant to look at it and evaluate why it was rejected. You've got to understand exactly why it was rejected and what policy areas it was rejected for. Because every local council has a local plan. And in that local plan, they have policy statements. And they cannot reject just because they feel like it. They have to reject it because it's against, building it goes against some planning policy in their local plan. And if that cannot be justified, then you've got a case for an appeal. So what a planning consultant would do is they would go through the reasons for refusal and try to figure out, are they valid? Are they actually planning policy reasons for refusal? If they're not, then is there a case for an appeal? If they are justifiable in terms of planning policy, is there a tweak that can be made to the proposal, which kind of means that it conforms to policy? Now, that's often an approach that does work, but without having someone with that sort of skill set go through it, it's very, very difficult. Well, it's not difficult, it's impossible to tell whether you've got a cat's hope Helen chance of getting it through again.
The ambition, it takes some nous to get up in front of 5 experienced people
Absolutely,
and present a deal
Jordan.
that, as you said yourself, is beyond your means and experience at this point in time. So I have to congratulate you for that. So don't lose that. That will put you in good stead. I suppose just echoing what some of the guys have already said, this isn't a deal without planning. It doesn't work. And it's already been knocked back recently. So it's hard, especially given it, as the guys said, it's B2, it's not permitted development rights. It could just get knocked back and knocked back. Maybe they want to keep it as a Printworks, keep jobs. I don't know. So without that, it's hard for it. It's not really a deal at all. So Ranjan gave some great advice there. Try to play around with the owner's flexibility on that to see whether they're open to it. But that's obviously not a good sign that they've turned it down already.
Yeah.
Maybe they were already given a sweetener and they still didn't want it. I also agree with Helen that it's kind of been presented as a if all goes well type situation. You make 23%, all won't go well. Something's going to go wrong, and that's going to eat into that 23%. So that's kind of where I was. So that's where I stand on it as it stands.
Nicholas?
I think the trickiness of this one is not just the fact it's been refused planning. They're citing the loss of employment, which is always a tricky one to overcome. Really, really tricky. You're going to have to get on some hard-hitting consultants to spend a few £1,000s on reports to try and back up an argument that you can justify the loss of employment. So there's going to be some costs associated with that, and they've clearly stated that's their concern. So
this is the classic, really, which has plagued the whole strategy of converting commercial buildings to residential use before permitted development came along. Because what happens is that if a commercial building is not eligible for permitted development rights, then the councils can poke their beaks in and say, no, we want to protect places of employment within our borough. So you cannot convert this building to residential use. And what permitted development have done is just obliterated that. This office building or whatever it is, you can convert it to residential, and preserving a centre of employment is not a material consideration for that decision. And this is actually right, because what councils have failed to realise is that certain old commercial buildings simply are not fit for purpose for carrying out that particular industry in the modern world. Now, this is a building which was built more than 50 years ago, and it's a print works. The printing industry has changed in terms of, when at the time this was built, the kind of equipment in there was very sort of lots of clunky sound generating bits of machinery, big engineering type of things and all of this. Now it's all digital, isn't it? It's not that sort of building that's required for that sort of equipment. And this sort of change in commerce is reflected across every industry type. Commercial buildings that were built 50 years ago for a certain industry are not suitable for that industry anymore. So you might as well convert them to residential use. But the problem here, of course, is that this type of building is not on the list of commercial buildings that can be converted to residential use. So you have to go through full planning. That's a right old pain in the bum. Permitted development is far easier. If you want to find out more about converting commercial buildings under permitted development, then come on one of my free 90-minute webinar classes, which I do on Sundays. The link is on the screen, property-workshop.com, and in the description below.
Any number of reports might not solve that for the council. It's a political point. So I think what you would need there is to go and get a really well-respected firm to write those reports and be involved in that process, and that's going to cost you more money than a less contentious site. Also, it backs onto a row of residential properties. So anything you do build, the council is going to have significant issues with overlooking. Yeah. You're going to be looking over a number of properties' back gardens. So the design of these, and then at the front there's a row of shops with presumably flats above. So on both sides of the development, on both elevations, design, yeah. You've got overlooking issues, and it might not be a huge issue if the distances are suitably far. It's hard to see from the basic information we've got today, but with the restraints on the site and the current comments of the council, I just think there's probably better deals out there for you at this time. I wouldn't want to take that site on. I want to take on a site where I know I've got the planning, or it's a no-brainer, because planning's such a huge risk in property.
That's putting it mildly, isn't it? As a developer, you want to go for certainty. If you're in today's market, where the long-term future, who knows what the market's going to be like in 3 or 4 years' time, you want certainty, and certainty is really through permitted development. That's what Nick's saying.
Interesting. I'm not as negative about it as the others. I think from a planning point of view, it's a mixed-use area, clearly. The scheme they put in was, the last people put in was over-ambitious, height-wise, spice-wise, everything was wrong with it. And I would imagine it was put in by someone pretty inexperienced. I think there's a real possibility of getting planning on this. Ideally, you do it subject to planning, of course, because you take a lot of the risk out, and if you can share some of that with the owner, and encourage them, tease them into doing the deal with you, that is clearly the way to do it. To get planning on that is probably £60,000-70,000 to get planning. That's the risk that you're taking. I don't think it works out.
That's a very good point that John raises, because people often do these subject to offers, and it's a good thing to do. So you take the risk out of it, you secure it on an option, and it's large. You hear people talk about, I secured this site with an option for £1. So what that means, you've just put £1 down. But what it ignores is that the developer is sinking in the costs, risking money in professional fees in order to get the thing over the planning line. And, it's not just the planning application fee. The planning application fee might be, hundreds of pounds or a couple of £1,000s. It's the architect fees. It's all the surveys that they make you have. I mean, you will find that if they will want things like transport surveys, to measure the impact on the street of having additional dwellings. They'll want light surveys. If the buildings are in close proximity to other buildings, they may want some kind of structural report. They tie you up with so many reports that you need, professional reports, and each report costs a few £1,000s. So for a site like this, it's quite easy to run up a bill of professional services of around £60,000-70,000, as John says, just to actually get your planning application through. And of course, if it doesn't go through, that is a sunk cost. So yes, you can walk away from the deal because you've only got an option. An option means that you've got the option to walk away if you don't get planning. But you will have lost the fees that you've spent in getting to that no decision, and there lies the risk.
At the current sort of price that they want for the site, and it may well be that actually that site is more valuable for its current use, or warehouse use, than it is residential. And just because you've got a chance of doing it doesn't mean you want to do it. Even if it's got planning, sometimes doesn't mean you want to do it. So I think I like your ambition. I think it's well worth you coming today. For me, it's the deals. It's too expensive because the build costs are going to be a lot more than I think you've got in there. So for me, it's not a deal that I could invest in. But what I would say is come back on the next series, because I think you'll come back with a better deal than this one. So thank you.
Definitely.
Ranjan?
No, I echo a lot of your thoughts about, sometimes commercial, you keep as commercial. I'm not entirely convinced that you would get a scheme on this site to make a decent return for anybody. And I love the ambition, and I would focus the ambition on easier to do sites. I know I keep banging on about PD, but one of the things that's happening now, of course, is there's so much stuff that's going to be so much simpler. The planners don't have much to do now, so they're going to be all over stuff like this. Come back by looking at stuff that you can implement easier without getting those pesky planners involved. And Nick is absolutely right on the reports. I mean, they want to eat up your money by saying, get this report and that report and that report.
That would easily be 60, 70,000.
Exactly. Each one is a grand minimum, just to tell you a tree is not significant when you know it's not significant, all this sort of baloney you get. It's too complex, I think.
Paul?
Yeah, you can see my face as I made that comment about the tree report. We filmed this in March 2020, and I think at the time of filming, we were working on a site where we're looking at putting a house up in Islington on a plot of land that has some overgrown. It's just overgrown, and the council insisted on a tree report. To have someone go there and just tell me that this wasteland of crap doesn't have any significant trees worth protecting. And, you're down for 1,500 quid, but, that's what planning's all about.
I think it's all been said, really.
Yeah.
I think the consensus is that the deal probably doesn't work. It might, but probably doesn't. You've taken the right approach, I think. You've got up here, you've found the deal, you've packaged it. I'd say package it a bit better next time. Just a little bit of advice, print out 5 pamphlets, for example, so that we can all have one in front of us. Maybe do slightly more research, maybe do engage with the architect, maybe do spend a little bit of money before asking others to invest in it, to show that you're committed to the deal, and also to find out more information, because if you'd have got a pre-planning report that was very positive, that might have changed everyone's opinions.
That's a very good point, Paul.
So I think it is worth investing in something if you think it's worthwhile.
Yeah,
just a bit of advice for next time.
Brilliant.
Helen?
Yeah, for me, it's the numbers. We've talked about costs, and that obviously will have an impact on the return on GDV. So it doesn't work for me on that. But again, well done for coming here.
No,
Love your ambition.
Thank you.
Nicholas?
Yeah, to sum up my thoughts, I think the word risk sums it up. I think you've got too many variables that could go wrong.
Yeah.
Constrained sites, numbers are a little bit under what they should be. Asbestos, contamination, cost of reports. It's for one site, it's got everything that could go wrong. It might not, and you might make some money, but it's just far too risky.
It needs to be a lot cheaper.
So.
Yeah.
Jordan, thank you very much for coming in. I hope it's been useful. I know you have not gone away with the deal, but you have gone away hopefully with a lot more information and experience.
There's a huge amount of risk. The main risk is the complete uncertainty. You've got no idea whether you're going to get planning permission. You've got no idea whether there's any hope of getting this accepted again. And for that reason, it's very difficult to price. It's the site as it is. It's a former print works in a very old building. No one's interested in that sort of building for that sort of usage right now. So it's very, very hard to value in its current position. It has to be redeveloped. It has to be redeveloped in some way. And without having a clue on what it can be redeveloped into, it is very, very hard to value and move forward. And this is the massive problem which smaller developers have faced. And this is why a lot of defunct buildings, commercial buildings, have just remained unoccupied, because they're too small for large developers to dive in and repurpose. They're just too risky for smaller developers because of all the uncertainties. You can see that Jordan can't raise the finance from 5 angel investors. There's too many moving parts, there's too much uncertainty, and we've got no idea what's going on. Now, fortunately, smaller investors are saved by central government, who are looking to build, and they're introducing so many different permitted development rights that allow buildings to be repurposed. My advice is, listen, don't make life difficult for yourself. Go where the wind is in your sails. And the wind is in your sails where the government and the powers that be are supporting what you're doing. And that is with permitted development. So find out what you can do with permitted development. Find out the buildings which are suitable and eligible for permitted development rights. Find out how to find those buildings, fund those buildings, and make those deals happen. Because those are the easiest ones to do in the current climate. And if you want to know more, turn up to my free webinar, property-workshop.com.
So thank you very much for coming. Thank you.
Thanks a lot for having me.
Okay, Jordan, how did we get on?
Unfortunately, my offer got declined, but I got some really positive feedback and some constructive criticism, which I can take forward onto future projects. So it was disappointing, but also a real learning experience and really worthwhile.